Ever looked at a financial chart and just saw noise? Like, what is this even supposed to be saying? Well, you're in the right place. Today, we're going to learn the secret language of the market. We're cracking the code on Japanese candlestick charts, one of the most powerful tools out there.
Okay, so take a look at this. Right now, it probably just looks like a bunch of random red and green blocks, right? But believe it or not, this is a story, a full-on drama about a battle between buyers and sellers. And by the end of this, you're going to have this secret decoder ring. You'll be able to read exactly what this chart is trying to tell you. So first things first, let's learn the language.
So we're diving into the market's language. And you got to understand, these charts, they're so much more than just data points. They are a visual language. They give you this instant gut-feeling read on what the market is thinking. It's not just about what the price did, it's about how it did it, the emotion behind the move. And this language, it's been around for a while.
So what are we actually looking at here? Well, a Japanese candlestick chart is a way of seeing price action that goes all the way back to 18th century Japan. It was dreamed up by this incredible rice trader, Munehisa Homa. He figured out that markets weren't just about supply and demand. They were driven by human emotion, fear and greed. And he created these charts to literally track that sentiment. Pretty amazing, right? A centuries-old tool that's still one of the best we've got.
All right, let's zoom in and break this language down to its most basic letter, the single candle. If you can understand the anatomy of one candle, everything else starts to click into place.
Now, this might look simple, but packed inside every single one of these candles are 4 super important pieces of information. It doesn't matter if the candle represents a whole day, an hour, or just 1 minute, it always tells you 4 things: the open price, the close price, the highest price it hit, and the lowest price it hit, all in one little shape.
Okay, so the first thing you'll notice is the color. This tells you who won the battle for that period. If it's green, the price closed higher than it opened. That's a win for the buyers. We call them the bulls. But if it's red, the price closed lower. That round goes to the sellers, the bears. It's that simple. Green means buyers are in charge. Red means sellers are.
But here's where it gets really interesting. It's not just about who won. It's about how they won. Was it a knockout? A close fight? The shape of the candle, the size of that colored body, and those little lines sticking out, the wicks, that's where you find the juicy details about the intensity of the fight.
So let's look at the nuances. Think of it in 2 parts, the body and the wicks. The body is that fat colored part. That tells you the distance between the open and the close price. A really long body? That's a decisive victory, pure momentum. A tiny little body? That's indecision, a real tug of war. Then you've got the wicks, those thin lines. They're like the ghosts of prices that were tested but ultimately rejected. And man, the wicks tell such a story. Imagine this. You see a long wick sticking out the top. That means the buyers got all excited and pushed the price way, way up. But then the sellers showed up and just smacked it right back down. That's a huge clue about selling pressure. On the flip side, a long wick at the bottom tells you the sellers tried to tank the price, but the buyers stormed in and said, nope, not today, and pushed it right back up. That's a huge sign of buying pressure.
Okay, so we've learned the alphabet. Now, let's start forming words and sentences. See, when these individual candles start grouping together, they form patterns. And some of these patterns are like the major plot twists in a movie, screaming, hey, the trend might be about to change.
First up, a classic, the hammer. The name is perfect because it literally looks like it's trying to hammer out a bottom for the price. It's a really distinct shape, and when you see it, you should pay attention.
So what are you looking for exactly? Here's the checklist. A small body up at the top, almost no wick sticking out of the top, and a long lower wick. We're talking at least twice as long as the body. But the most important part? Where you see it. A hammer only counts if it shows up at the end of a downtrend.
The story this candle tells is just epic. That long lower wick is the sellers giving it one last big push down. They're trying to crash the price. But then, boom, the buyers step in with incredible force, soak up all that selling, and rocket the price all the way back up. It's a massive rejection of lower prices. It's like the market is saying the sellers have finally run out of steam.
All right, next pattern. This one's a 2-parter called the bullish engulfing, and the name tells you everything you need to know. A massive wave of buying just completely swallows or engulfs the selling from the day before. So here's what it looks like. You're in a downtrend, and you see a small red candle. Then the next day, a huge green candle appears, and its body is so big it completely covers the body of the little red candle from before. It's a total 180-degree flip in sentiment, just overnight. The reason this pattern is so powerful is the sheer brute force of it. On day 1, the sellers got a little win. But on day 2, the buyers didn't just show up to play defense. They launched an all-out attack that completely wiped out the sellers' progress and then some. It's a total takeover.
Okay, last key pattern for today, and this one's a bit different. It's called a doji. Think of a doji as the market just pausing. It's a perfect stalemate. It's the market taking a deep breath and basically shrugging its shoulders, asking, all right, where do we go from here?
You'll spot a doji right away because its body is basically just a flat line. The price opened and closed at almost the exact same spot. Now, there might have been a huge fight during the day. You'll see that in the wicks, but when the bell rang, it was a tie. When you see a doji after a strong trend, it's often a big warning sign that the trend is losing its juice.
And this, right here, this might be the most important thing you learned today. A pattern by itself is pretty much useless. A hammer, a doji, whatever. It means nothing in a vacuum. Its real power, its meaning, comes from its context. It's all about where that pattern shows up in the bigger story.
So, how do you use this? Here's a simple 3-step playbook. Step 1, identify the overall trend. Are we going up, down, or sideways? Step 2, spot a pattern. But don't just see it anywhere. Look for it at a really important price level, like a floor of support or a ceiling of resistance. And step 3, look for confirmation. Don't jump the gun. Wait for the next candle or a big spike in volume to prove the signal is real.
And if you ignore that framework, you're going to make the most common mistakes. So please avoid these pitfalls. Don't trade a pattern just because you see it. Don't ignore the bigger trend. Don't forget to check the volume for confirmation. And be super careful in tiny time frames like the 1-minute chart. It's full of market noise and false signals. Just remember, context is everything.
All right, we have covered a ton of ground here. From the basic building block of a single candle all the way to the deep psychology behind these powerful patterns. Now it's time to start your journey.
Look, if you remember just one thing, let it be this. These charts tell a story. They're not just random lines. Every single candle is a chapter in the never-ending war between buyers and sellers. And once you learn to speak their language, you get this incredible window into the mind of the market.
You've got the basics now. You've got the alphabet, you've got the grammar, and you know what the big plot twists look like. You have everything you need to start reading these stories for yourself. So the only question is, what story are you going to read next?